Hey folks, this is Lee Gettess with the Market Sense for the week of April 27th, 2010. The charts I use are all courtesy of the Trade Navigator software that Genesis Financial Technologies provides. Did I say courtesy? Yes, it's courtesy of Genesis. You know what I meant. Anyway, in the bond market, bonds kind of surprised me. Last week sure looked like they were topping out and going to at least make a turn down to the lower red envelope here. And instead, they kind of blew out to the upside. They held near the upper red envelope and blew out through the blue line. The upper red envelope is 116.24 to 116.30 area. And the blue line that I really thought they would hold is about 117.24. They've blown through that, and they've even taken out all of these highs from the last couple months in here, really for the whole year. So based on this, gosh, they could go up here to the 121 area. It's actually like 120.24, but this purple line kind of coincides with these old highs way back here in October and December of last year. Certainly, looking at the chart, you'd have to believe they have the reason to go up there, or have the potential to go up there. I'm sort of dubious. I think this move might be a little bit overdone. Maybe it's just because I'm stuck on the idea that I thought they were going lower, but I'm just sort of suspicious, and I won't be surprised if this move just drops right back down. We've got the Fed meeting adjourning on Wednesday, and they'll announce the announcement, their Fed statement in the afternoon, and they're not going to do anything, but it still is an excuse the markets use sometimes to go nuts, and it wouldn't surprise me if they turn back down from there. However, purely from a technical standpoint, you got to believe they've got room to go a fair amount higher. Now, in the stock market, we finally got a more serious breakdown. In fact, they broke down really hard Tuesday, which is really crappy timing because you really can't do anything about it with the Fed meeting and the statement coming Wednesday. But they broke down to an interesting area, the lower red line that they're sitting at there. And I apologize, I lose this cursor. I can't see it right now as I'm trying to show you stuff, so I don't know where it is. But the lower red line is what I'm looking at there. That's 1178. There is a possibility that that's it. I mean, it could be that they've moved as low as they're going to move and they're going to go back up from here. And the blue line that we see overpriced is actually around 1224, so they could turn and head right back up there. I kind of doubt that, but the possibility's there. What I would really like to see is we've got old highs from January that let's call it 1140. It's a little more than that, but roughly 1140. And then we've got this purple line down here in 1130 area. I'd really like to see a much more serious breakdown into this area because I think that would make for a better buying opportunity. So I'm greedy. That's what I want. And whether they come down that far or whether they stop at this red line, I fully expect to see them at new highs again in the month of May. So there you go. I'm on a limb. I think new highs in May sometime. But again, gosh, I would really like to do something with this market. I think the activity sets up that something's happening, and you almost can't because of the Fed meeting. You've just got to wait for the nonsense from when they make the announcement of what they're not going to do, and then the market does its reaction. You just got to wait for that, and so I'm kind of locked out. I hope you have something profitable you can find to get into. Thanks for checking in with us, and let's do this again next week.